One of my favourite pieces of personal finance research is the Financial Lives Survey. It comes from our regulator, the Financial Conduct Authority, and it looks at the financial situations of people across the country, along with the financial products they use and their experiences of engaging with financial services businesses. The latest Financial Lives Survey came out today, and it's a good one. Not good in terms of positive findings, sadly, but good for this personal finance nerd. The headline finding is that there are now 27.7 million adults in the UK with characteristics of vulnerability. These vulnerability characteristics include poor health, low financial resilience, or recent negative life events. If you have one of these characteristics, then you're at greater risk of harm. It's a fairly significant increase in levels of financial vulnerability since the latest Financial Life Survey, up by around 15%. And the pandemic has clearly exacerbated these levels of vulnerability. Before the onset of the pandemic, the numbers of UK adults with low financial resilience had actually fallen compared to the previous survey, down from 11.6 million in 2017 to 10.7 million in 2020. But then the pandemic came along, and the FCA noted that there were already warning signs back in February 2020 that many more adults might find it difficult to cope with a systemic financial shock. People with low financial resilience were in the worst financial position before Covid-19. Many others, however, only had limited financial resilience at the start of 2020. The significant increase in the number of adults with characteristics of vulnerability between March and October 2020 was driven mostly by the experience of negative life events in that time. Redundancy and reduced working hours were two big drivers, resulting in lower financial resilience levels. The FCA reported that Covid-19 has had a disproportionate impact on those of working age, the largest proportional increases in vulnerability since February 2020, by more than 40%, have been among younger adults, those aged 18 to 34, and also among the self-employed. In contrast, retirees have seen a small proportionate decrease in the numbers who have the characteristics of vulnerability. That one raises an interesting question ahead of the budget next month. Should the Chancellor, Rishi Sunak, as he starts thinking about tax rises to claw back some of the pandemic response borrowing, should he focus those tax increases on retirees instead of younger workers? After all, younger people have already paid a high financial price during this pandemic, in a large part to protect the lives of elderly members of society. It would seem grossly unfair to hit them financially twice. The research doesn't show a significant increase in people having a health condition or an illness, reducing their ability a lot to carry out day-to-day activities. It does show the impact of COVID-19 on our collective mental health, though, and mental health challenges can create difficulties when dealing with financial services. In October 2020, the FCA found that 18% of people had a mental health condition or illness. That's up from 12% in February 2020. And then the additional research carried out in October asked about emotional resilience. They found that 7% of UK adults said that they find it very difficult to recover from negative experiences. 1% overall have low emotional resilience, but not the other characteristics of vulnerability. But including the emotionally vulnerable people would increase the proportion of those with characteristics of vulnerability from 53% to 54% in October 2020. Let's dive into some more of this data together and understand what it means, what these findings mean for our personal finances. The research was concluded in February last year, and it was based on a survey of more than 16,000 people carried out between August 2019 and February 2020. But the study was then brought up to date with a subsequent survey of more than 22,000 people carried out in October last year, focusing on the financial impact of the pandemic. It was during this October survey that the 27.7 million adults in the UK with these characteristics of vulnerability were discovered. Within this vulnerable category, the number of adults in the UK with low financial resilience increased from 10.7 million to 14.2 million. Low financial resilience can include having too much debt, having low levels of savings, or having low or erratic earnings. The survey also found that in October, 30%, or nearly 16 million UK adults, said they expected their household income to fall during the next 6 months. 25% of respondents, that's equivalent to 13.2 million UK adults, expected to struggle to make ends meet. In response to these fears about money, many adults reported they were likely to cut back on essential spending or even use a food bank. 33% said they would cut back on the essentials, and 11% considered a food bank as a solution to their financial challenges. 16%, or 8.1 million adults, expected to take on more debt as a way to make ends meet. However, on the other side of the coin, 48% of UK adults said they have not been affected financially by the pandemic, and 14% reported an improvement in their overall financial situation. During this pandemic, the FCA has worked with the financial sector and various consumer bodies to help protect consumers from the very worst financial impacts of the crisis. Those measures included mortgage and credit payment deferrals, and according to this new Financial Lives Survey, 17% of mortgage holders have taken up a payment deferral, and 40% of those reported that they would have struggled a lot without these measures available. Within the report, there are some particularly relevant findings when it comes to diversity and inclusion. Looking at the examples from just before the pandemic, back in February 2020, 60% of those people showing low financial capability were women. 44% of women aged 75 plus were digitally excluded. That's compared to just 28% of men in the same age group. That's a significant finding because there is a huge move away from traditional bank branch services towards online banking. With more and more of our bank branches being closed across the UK, we risk shutting out banking services for some of the most vulnerable in society who simply cannot access online banking services that easily. The report found that in the year to last February, 50% of adults with a day-to-day account carried out banking activities face-to-face in branch. That was down from 63% in 2017. Despite this decline in bank branch usage does remain high among older adults. The survey also found that 2.5 times as many women as men used catalogue credit or shopping accounts, and the use of these shopping debt facilities among women grew by 14% since 2017. The FCA also found that only 12% of women who are saving in a defined contribution pension are highly engaged with their pension savings, compared with 26% of men. And women were more likely to read their pension statement, review the value of their pension pot, choose to increase pension contributions, or know how much they are paying in charges. The FCA also reported that 34% of black adults had low financial resilience. That's compared with 19% of white adults. 63% of black adults in the UK showed characteristics of vulnerability, compared with 45% of white adults. One factor behind these higher levels of vulnerability for black adults was the higher number who rent their home, 52% compared to 21% of white adults, making black adults more than twice as likely to be renting their home. Black adults were also less likely to hold any savings products, an investment product, or any protection product than white adults. Another element of the survey that I find particularly interesting is levels of trust in financial services. It's always nice to be compared to a politician, a journalist, or an estate agent when it comes to trustworthiness. The FCA found there has been a slight improvement in levels of trust and confidence in the sector since its previous survey back in 2017, but the levels do remain very low. In February 2020, only 42% of UK adults had confidence in the UK financial services industry. That is up from 38% in 2017, but only 35% agreed that financial firms are honest and transparent, and that's up from 31% in 2017. People with characteristics of vulnerability and the over-indebted were more likely than average to lack confidence in the industry. Trust in the different retail financial sectors remains low across the board. In February 2020, banks came out top as most trustworthy, but were only trusted highly by 20% of adults. Can I suggest here that trust refers to everyday banking services, things like running a current account, and not, for example, trust in a bank selling you a financial product? Only 7% expressed high trust in insurance companies. A more positive picture emerges when consumers rate their own provider. People generally have higher levels of trust in their own provider than they do in the sector in general. And this is something we consistently see. While people may not trust the financial services sector as a whole, once they've experienced a financial services business, they are far more likely to trust that organisation, because that trust is based on personal experience rather than perception. Nisha Arora, Director of Consumer and Retail Policy at the FCA, said, "The Financial Lives Survey is fundamental to the work we do as a regulator, enabling us to hear directly from consumers across the UK. While there are some positives in the data, many of the findings are worrying. Since the start of the pandemic, the number of people experiencing low financial resilience or negative life events has grown. The pain is not being shared equally, with a higher than average proportion of younger and BAME adults becoming vulnerable since March, it is likely the picture will have got worse since we conducted the survey. Vulnerability remains a key focus for the FCA and has been brought into sharp relief by the pandemic. We continue to work with the wider financial services sector, including businesses, regulators and government, to support and protect consumers. We expect to finalise our guidance on how firms should treat vulnerable customers shortly. A few thoughts from me just to wrap things up on the key findings in this research then. The pandemic has clearly acted as a catalyst for accelerating existing issues around financial vulnerability, around resilience. We all need to take greater personal responsibility for this, as we just cannot rely on the government to step in and to save us when things go terribly wrong. During this pandemic, we've seen extraordinary levels of government financial support and intervention, levels of support that were impossible to imagine just this time last year. But still, millions of people have fallen through the cracks of this government safety net, and it still fails to cater for absolutely everybody, regardless of their circumstances. My view on this is we need to take steps as individuals to become more financially resilient, to become what I call finvincible or financially invincible. I'll link up here to my video explaining my 7 financial invincibility principles. Resilience, this capacity to recover quickly from difficulties that we all inevitably face in our lives, this is what sets apart those who struggle financially and those who thrive. It's why resilience is such a key component of teaching in schools, with the education system focused on building resilient young adults. Part of that resilience comes from thinking ahead, thinking about the financial shocks that you might experience in life, and then taking the steps to mitigate those shocks. It absolutely means minimizing the amount of debt you have, buying what you can afford instead of what you want. And it means having your own cash safety net in place in the form of cash savings that you can use to get you through a financial emergency. The UK financial services sector comes in for a lot of criticism, and rightly so in many cases. It is far from perfect, but it does play a critical role in our lives, providing access not only to the day-to-day services we all need, like banking, but the products that allow us to build wealth for the future and to protect us against catastrophic events. It's incredibly sad to read that more than 40% of people have these characteristics of vulnerability and are at risk of greater harm as a result. I make these videos in part because hopefully I can do more good speaking to hundreds or thousands of people every time than I can working with clients on a one-to-one basis. I end each of my videos by saying that when it comes to your money, the more you know, the faster it can grow. And financial education, I believe, it's such an important part of the solution when it comes to addressing vulnerability and addressing low levels of resilience. How would you start to address some of the challenges identified in this Financial Lives report? Do let me know in the comments below. I'd also love to hear from you if any of the findings in this survey resonate with your own experience in recent years, especially your experience since the onset of the pandemic. I'll link to the Financial Lives 2020 survey in the description below. Thank you for watching this video. Until next time, I'm Martin Bamford, and remember, when it comes to your money, the more you know, the faster it can grow.